Hello, hello.
All right, so you guys can hear me, right?
Yeah,
All right.
Loud and clear.
Okay. The things you have to look for are basically the important stuff. Like example, you picked out the range from the monthly time frame, sorry. For the monthly time frame in particular, things that has to do with the direction of the next rally. Because what you want to trade is just this single candle. Okay? You're trying to trade just this single candle. You're trying to trade within this single candle. All right, an internal range. So you just want to know the direction, so you know which POI is stronger, where is stronger to pay focus on. Right now, what do we see? We see we have a pushback up before a pushback down. So we see this high would be like liquidity. Why do I say so? Because this is an obvious OB, right? And now what would that be inducing? We have a hidden base between these points. Okay. Now, where is the range? We have this high to this low, which invalidated this low. So now within our premium to discounts, what part of the range are we in? There's a video for premium and discount as well. So you can watch that as well. We see we're at the 50%. Okay. We're at the 50%. All right. All right. So mainly we should have a POI around this. But then if we do see a reaction from this is a monthly, don't forget. If we do see a reaction from this, we can trade that. But just what we're looking for is a reaction. You see this little move here. Obviously, I would have marked this as a POI as well, because you see this little move, which we had a reaction from this, is over 259 pips. All right, that's enough for you to get something very nice, even not for the day, but even for up to 3 days, you know. So if you know the direction of the trend and you know the available obstacles, which could be hindering the trade from heading to the direction, you could catch, or you could get a lot of good pips with a reasonable risk management. Now, where are the possible POIs within this range we can see a reaction from? We have this other obvious order block at the extreme, which we see reacting from mitigation of an obvious one as well. All right. And then secondly, we also have this guy have acting as inducement, stacked up multiple highs of the lower time frame. Okay. So then what else? What else can we see? We see this guy. All right, now you see we're operating within the premium of this range. Why? Because we see we are bearish. So what we're expecting is something like this. Right? So if we're expecting something like this, which means the possible POIs within this range is where price is likely to react from. So until we get to these points, you know, it could be like this, it could be like this, it could be like this, it could be like this. So to get the proper accuracy is where we're going to the lower time frame. So even as far as you're going down to the lower time frame to do this exactly the same thing, to make sure you add the important infos which needs to be added. Okay. So we clear this out, and then we go to the weekly time frame. On the weekly time frame, what do we see? We say this is the range, although we just want to know the possible obstacles which we have against the trend and the points which we can trade for. Remember, structure works like this. Now, once we have a break of structure, what happened? Price returns back to start filling the imbalance which were created within this range. All right?
Yeah.
And when price starts doing this, it becomes a repeated circle, which you start seeing something like this. You see, fill the imbalance, return back, fill the imbalance, return back, fill, return, which this now creates new one. So this is how structure works. So when you see liquidity, which is this, is inducing something over here. This was inducing this, and this was inducing this. So once there's a break of structure, price starts using the swing highs of the previous range as liquidity. You see that? So once we also have a break of structure from here, price will start using these guys as what? Liquidity. Okay. Right? They'll be inducing the previous lows, which at the same time creates new one. All right. So this is how structure works. And this is how you have to understand how to follow market structure. So while we're marking the obstacles along the way is for us to be able to identify these structures. Okay. So now what do we see within the obstacles? What do we see where POIs could react from? We see we have this guy. So this is resting within a monthly hidden base. So this is likely to get a reaction. And then we also have this as liquidity. We have this demand zone resting above it. Then we have this as liquidity, and we have these highs. All right, so we have 3 POIs now. We are refined down to 3 possible selling POIs. Okay, now on this side of the range, knowing that we're trading on this range, we're trying to trade just the next candle after this. What do we see? The weekly is bullish, although obviously it's clearing out a swing high, which is liquidity. So we're expecting a pullback. Okay, so right now we're likely to be mitigating this POI. Okay, which is being induced by this guy. So this is not in premium, right? This is not in premium. So we just want to see a little reaction like this. Remember, we're trying to trade just this candle. Oh, likely, this is what we're likely to see. But within this range, what can we see? I see we have a hidden base right here, which is being powered by an inducement. And also having to stop our liquidity, giving a swing high formation. Well, let's go to the daily time frame to see if we have any confirmation on that. Please don't worry, I'll send the recording for you to also understand this more. But do make sure you pay attention.
I have a question, Jay.
All right. Who's that?
This is Samuel.
All right.
Yeah, could you kindly go back to the left where you picked the POI? Yes, the IP account. I think you go back to
this.
Yes. When you go back to the weekly, it's clear over there, so that I could ask my question.
Okay.
Yeah, sharp. The IP account that you pick that POI for. Yeah. I'm looking at the imbalances. If the imbalances has been filled, you could still look at that IP account for reaction, correct?
Well, this is the weekly time frame.
Yeah.
Obviously, this entire point won't be our point of interest once it's refined, right? So if it's obvious like this on the weekly time frame, which means on the daily, there have to be something, which we can see clearly. The IP account of the daily time frame is still within the IP account of the weekly time frame, and we have the imbalance at this point, the fair value gap. But on the weekly, we can't see that, right? So which makes you understand that this is a daily POI, and we're expecting minor reactions. All right? We're not expecting it to invalidate any weekly points, which is resting right here. As we can see, we have this swing low. We have this as liquidity. So since we know this is a weekly POI, all right, this is on the weekly time frame. You can see this is obvious. We are expecting something like this. Okay, to go back higher. We're not expecting this to swing. And at the same time, we can also see something like this. Because this is also an inducement. Okay, so we don't tell the market where to head, but now we know we have 2 possible directions. Either we see this or we see this. So now if we're waiting for confirmations from this point, we can't be looking for something like this. All right, this is no reason for us to buy. We have to wait for a pullback because we're clearing out liquidity. Okay, so this is a selling point. So even if you don't see a selling pattern on the lower time frame to give you that confirmation that price wants to go lower, you can as well not take any buy position from this point as well, except the confirmation is on the 4-hour time frame. As you can see, obviously this is the weekly time frame. Okay, so once you see something like this on the 4-hour time frame, and you see this clearing at this clearing at this, and you see there's a possible POI around here. If this is being supported by the daily time frame, you can also have this, because you can see clearly this is about to get invalidated. So even if this is going to be forming on the 4-hour time frame, we're going to be having a proper confirmation from a higher time frame. Okay.
Okay.
So
thank you.
That's a selling point from the weekly, but that doesn't mean that the POI has to be all from the weekly time frame. So let me continue. Just take all this out. Okay, so on the daily time frame, we see we have this IPA candle and also stacked up highs above it. So this is liquidity. We have too much liquidity western at this point, so there's no reason for us to go into an aggressive entry. All right, this is going to be very dumb if we decide to go on an aggressive entry.
I think we're on the daily time frame.
Yes, I know. Yeah. You have a question? Okay, so on this time frame, we can refine this down to this. We can refine down to this. We can find down to this. For me, I would take the full candle. All right, let's take this IPA candle instead. Because now what can we see? We can see we have a clear of liquidity from here. All right, and we see price book structure from here. And we still see this. All right, as multiple liquidity points. So this is enough reason for us to pay attention to this as again. Now on the weekly time frame, what do we see? We see there's an obvious IPA candle here, or you can see another block, which we can see we are pinking out the week. On the weekly, is also within the body of our hidden base candle. So let's go to the daily time frame of the hidden base. It's still within the hidden base. All right. So now we see we have these points, and then we can see enough reason for us not to buy. All right, right now. So we are bearish. Okay, we're completely bearish. Now, bearish to what extent? You know, bearish to what point? Now on this time frame, on this range, this side of the range, this is the range. This low to this high, to range, to this low, to the range, to this high. So this is the range we're fighting against on the daily time frame. We will have a POI here, but we're not expecting price to mitigate this because that would be an invalidation, right? So we also have another block, a newly formed other block at this point. All right, now we can see we did clear liquidity from here. And we see we had a break of structure from here. So you can see how you understand how I did this.
Yes.
Now, if I ask you the key points, what are the stuffs in particular I paid attention to that you did not pay attention to? Can you identify them?
Inducement majorly.
Okay, inducement majorly.
Imbalance.
Imbalance.
Inducement and imbalance. Yes, an inducement.
Did we pay that much attention to imbalance?
I think you just mentioned it, but you paid attention to that inducement, usually before the POI.
Okay. All right. Let me just list them out. Whenever you're trading, whenever you're picking your analysis from the higher time frame, substitutes you should pay attention to. Number one, can you write them down?
Oh, okay.
So do you have something to write them down?
Yes. Okay, now you can go, sir.
Okay, so number one, we have the range, which you did pay attention to. Number one, pay attention to the range. We know the, you know the direction of the range, know where the price is heading. So that way you would know what to look for.